In this presentation, we will take a look at how to create a budgeted profit and loss report or budgeted income statement report. Let's get into it with Intuit's QuickBooks Online. Here we are in our Get Great Guitars file. Before we open up the process of doing the data input for a budgeted profit and loss, let's first take a look at a profit and loss. We're going to go down to the reports on the left-hand side. We're going to be opening up the P&L, the profit and loss, the income statement. This is going to be the performance report. This is the report saying, hey, how did you do over time? As opposed to the balance sheet, which is how are you doing as of this point in time. And we're going to change the dates. I'm going to make the dates from 01/01/20 to 02/29/20, let's say. So that's for the 2 months of data that we have been entering from. We're going to go ahead and run that report. I'm going to right click on the tab up top. I'm going to duplicate that tab. Close up the hamburger. Hold down Control. Bring it back down up to that 125%. Okay, here's our profit and loss report. Now, when we think about a budget, we're typically thinking of how are we going to do in the future? What's going to be basically our revenue and expenses in the future? That's going to be the budget. That's what we first probably think of when we think of a budget. We're thinking, this is what we've done now. How are we going to do in the future? A bunch of different ways and theories in terms of how to come up with a budget, which we're not going to get into now. That's going to be more kind of analysis or theory kind of ideas in terms of what's the best way to get a budget in the future. The simple term, however, is how are you going to budget out into the future? Well, you're going to start and take into consideration in some way, shape, or form the past. So you're probably going to look at the past, and if we had a full year like last year, we might say, hey, here's last year. Why don't we look at last year and think about then what's going to happen this year and think if we're going to do something similar. If we had a full year last year and you were doing the easiest kind of budget then going forward, you could take the year-end numbers as of last year, 12 months divided by 12, for the income statement, and then say that that's going to be kind of like your budgeted P&L for the next year going out. That might be the baseline. Again, that's too simplified because you do want to take into consideration ups and downs through the year because certain months may be better than other months, so you don't want just a straight report like that, but that would be something that would be useful. And you also want to take into consideration things in the future that might happen. So obviously we're hoping that the revenue will increase at a nice steady upward curve as we go. So we're hoping revenue goes up over time as well. And the expenses we would expect to go up, as revenue goes up, but in a different kind of relationship possibly. And we can consider some of the expenses that are going to be fixed and those that are going to be variable. So a lot of considerations in terms of how you get the budget, but from a simplified standpoint, you probably are looking at last period and saying, okay, I'm going to think next period is going to be similar, possibly then look into some major adjustments that you think might be there. What we want to do is just be able to then, once we have an idea of the budget, enter that budget into the system and then be able to generate reports in terms of what we expected to happen, the budget that we expected to happen, and then what actually happened, and we can look at comparisons from the budget to actual once we enter this into the system. So let's do that. We're going to go back to the tab to the left then. We're going to be holding down Control and scrolling back down to 100% so it doesn't do anything funny to us. We're going to be going up to the cog, up to the top right. So we're going to be in the cog up here. And then we're going to be in the Tools section. We want to be scrolling down or just using your mouse to go down to Budgeting. So then we're going to be opening up the Budgeting. Given this is our first budget, we're of course are just going to simply add the budget down below. So we're going to be adding the budget. And then we have the budget name up top. I'm just going to call it, let's just name it Budget 2020. Then we have the dates, we have the fiscal year, and we have some other options going here. We're going to make the full budget from January to December. So this is the one we want for the year 2020, January through December. We then have the intervals, which could be monthly. It's going to be typically the default. We're going to make the budget monthly, but we may want it quarterly or yearly. We're going to be sticking with the monthly hill here. And then we have the pre-fill data. Now, again, if usually the starting point for the budget is to take last year's numbers, and basically that'll be the beginning point. So you could say, hey, why don't you just take the actual last year's 2019 numbers and just plug them into the budget, and then we can have a budget versus actual. Now, I wouldn't say that that's a really well planned out budget, but that could be the starting point. You could feed in those numbers and then go through it and consider which numbers you need to change. We can't do that here, of course, because this is the first year of data, and therefore we don't have any numbers for last year, so we're going to have to figure them out just based on 2 months worth of data going forward. Next, you'll see our accounts down here. This, of course, will be the income statement accounts. They're kind of grayed out right now because we can't actually enter the data at this point until you go down to the bottom right where you see the next button, the little green button. That's the next thing we need to do. So we're going to say, let's go to next. Now we have the data input field. So if I go back up top, data input field, this basically looks like the profit and loss report, although it has a lot of the headers up top by month. It's basically the profit and loss report by month. And then we're just going to go through each of these and enter the data. Now, note we may not enter data for all of them. It's got all of the accounts that we have here, and some of those accounts we haven't used possibly. And really, we're looking for the big numbers because we're looking for the budgeted information. So we're not going to populate every number on this item. So first, I'm going to go up to sales up top. So I'm going to go up to sales, and we're going to enter the sales. I'm going to enter 500. And if you wanted to copy 500 all the way across for the entire month, and also note, by the way, that the budget for us, we've already gone past January and February. So really, we're budgeting for March at this point. But I'm going to enter data for January and February. And then when we look at the reports, we'll see that January and February, we'll be able to compare the actual versus the budgeted numbers for those months. So you're imagining for January and February that we would be entering the budget before we entered the actual data, and then the January and February would pass. Then we could run reports comparing the actual and the budgeted numbers, and then obviously we'll have the budgeted numbers all through the rest of the year here. I'm going to copy this across, so with that little blue button, and that'll copy it all across. So if everything's the same for each month, that makes it really easy. But we don't think it's going to be the same all the way across for revenue because we want that nice, steady, smooth increase, right? And so we're going to say, I think this should be going up, you know? So we're going to say, I think it's going to go up by a nice, steady 15% each period, right? So I'm going to say, what if, like, I start with 500, then I'm going to increase it by 15% or 1.15, 115%. So the next period, I think, should be 575. So I'm going to say this on February should be 575 because we're going to be increasing as we go. And then I'm going to take that and multiply it times 1.15. So the next one should be the 661.25. And so I'm going to say this should be 661.25. And then it should go up again. And then I'm going to say times 1.15. And it should be 760.44. And so on and so forth. So I'm just going to fill in the numbers for the rest here, and you can copy them in if you so choose. So I'm just going to keep going through that process. And then we're going to go to the equipment rental. I'm going to do a similar process here. I'm going to say it's 1,000 for the first month. And then I think it should go up to 2,000. So it's going to go up by 1,000 each month. And then 3,000, 4,000. Notice I'm using tab to go to the next cell. 6,000, 7,000. Oh, not right there. And I'll keep doing this across. And there we have it. And it totals up to that 78,000 at the bottom. Then I'm going to go to the service. Well, let's go to the product. So I'm going to go to the product here. And I'm going to say that this is going to be, let's do this at 500. And then this is going to go up by 500 each time. So it's going to be 1,000, 1,500. 2,000, and so on and so forth. Okay, so now we're going to go down to the expenses. So if I go down to the expenses, then the major expense we will be considering is cost of goods sold. Cost of goods sold is typically related to the income for the product, which I have that 500 at. So we're going to say that the cost of the guitar is usually like 80% of the price, the sales price. So if I was to sell 500 worth of guitar, we're going to say the cost is 400, and the difference of the 100 is the profit margin. So that's typically the kind of relationship you would see for the cost. So once you've figured the sales price, then you can say, all right, there's the 1,000 up there, 1,000 times 0.8, that's going to be 800, right? 800 here. And then you can do this all the way across. You can say, well, then now I have then the 1500 times 0.8 is going to be 1,200, and so on and so forth. So there we have the cost of goods sold. Now we're going to be looking at, let's find the bank service charges is the next thing I have in front. So bank service charges here. We're going to enter these across, and usually these expenses will be easier because we're going to say they're pretty much the same all the way across. even though my revenue goes up, I would expect the bank service charges to be pretty much the same. So I'm going to say 120 here. I'm just going to simply copy that across, 120. Next, I have the depreciation, which I'm just going to say is going to be 775. And again, I'm just going to copy that across. Depreciation at the 775, copying it across. Interest expense down here, we're going to say that's going to be 1,000. And we're going to copy that across. Now, we know interest expense kind of changes from time to time, but this is an estimate, and we're basically going to say the interest is about the same across the 12 months. And I actually got that backwards. It should be the insurance. I'm going to say insurance should be the 1,000, and then interest wasn't that high. We're going to say it's going to be the let's say 150, and copy that across. So there we have it. Next, I'm going to look for the telephone. Now, notice if I scroll down, it kind of hangs up. I'm looking now for the telephone. So I'm going to scroll down, looking for the telephone. Here we have it. Telephone. That's the one I'm on. And that's going to be I'm going to put in 360. Copy that across. Next, let's look at payroll, where we had salaries and wages. I'm going to put in there 6,000, and we're going to copy that across. Then we'll pick up the utilities, which I'm going to put in down here at the 650. We're going to say that one's going to be copied across for the utilities. So let's see what we have so far. I'm going to scroll back up top here and see what we have. So we have the income items, then we got the cost of goods sold. Now notice we didn't include something for all of these accounts. We didn't use some of these accounts, haven't been used at all. And we could go in, if we don't like these showing up here, go in and actually make the accounts deactive or remove them, because these are accounts that QuickBooks is using that we haven't used, or we might want to keep them there in case we use them in the future. It's still early in our business, so it might be something that we would use. You can make them inactive as well if they're not something that you're using, but you want to kind of see what those accounts will be in case you got to go back into them and fix them or adjust them at a later point. So here we have these items. I think we had a payroll expense because we put it into salaries and wages, and we have the payroll expense. So I think we used payroll expense before. So we have two payrolls in there basically. I'm going to put the 6,000 into salaries into the payroll expense because that's, I think, the account we're using. Payroll taxes, I'm going to put 300, copy that across. And then this one down here, I'm going to remove this. I'm going to try to close that one out. So, like that. So that's how you can delete it without, basically tabbing through the whole thing. You can hit that X and that'll delete the whole row. So again, X, that'll delete it. And then we have the rent, travel, telephone, and so on. So that looks pretty good. So notice we're at a loss here. We're running a loss until August. So almost, and then we start to have profit happening through the end of the year, so we have a loss for the first year. So we're going to keep it at that. Now next time what we're going to do is we'll take this data and we'll run the reports with it. So I'm going to save this, then we'll take a look at the reports. Now these two for January and February, we already have that data, so we can run comparative reports, actual versus the budget. And then of course we have budgetary information for data that we have not yet entered for the rest of the year.